Hi everyone, welcome to my channel. I'm Doris and today we'll be going over the interest rate hike effect on the US housing prices. Recently, the house prices are rising and the Fed's interest rate have hit the property market. The national house price surged more than 40% during the real estate boom during the COVID-19 pandemic. On the other hand, 30-year mortgage rates rose to highs in more than 20 years as the Fed continued to raise interest rates. On October 19th, the 30-year fixed mortgage rate hit 8% on Wednesday for just first time since 2000. High interest rates have made consumers less willing to buy, while financial institutions and banks' limited ability to lend have also curbed demand. Rising interest rates have sent mortgage applications down to their lowest level in 30 years. U.S. real mortgage Redfin estimates that existing home sales are expected to be around 4.1 million units in 2023, the lowest level since global financial crisis triggered by Lehman Brothers collapse in 2008. Nick, who lives in Minnesota, has recently been worrying about buying a house. For the past 6 months, he's been looking for housing information every day, but he either asks for full payments or a sudden price increase by 20%. So he hasn't bought any suitable one yet. Although he has a relatively good and stable financial income, he admits that even the financial advantage, it'll be difficult to achieve the goal of buying a house. Although Nick felt he could still win a better house, he wanted to choose a better house and not spending too much money on a house that doesn't worth buying it. Just 3 years ago, the average 30-year fixed mortgage rate in the U.S. was just 3%, and as the mortgage rates approached 8%, the pressure of mortgages was growing. Basically, 2 years ago, if you buy a $400,000 house with a 20% down payment, you'll now pay nearly $1,000 with more amounts than you did 2 years ago, which has been placing a heavier financial burden to many families of tightened financial conditions. Redfin suggests that Americans now need more than $110,000 to buy a mid-priced house, which is much higher than the average income. In other words, 2023 is likely to be the highest ever income threshold for Americans. And that doesn't take into account the differences between high home prices areas such as New York. Moody's, an international rating agency, also noted in a recent report that housing affordability in every U.S. state have declined over the past few years and have shown no signs of easing. This is a damaging trend for the real estate industry in the upcoming years, as the demand for the new houses and the second-hand houses are decreasing. The reason for this price and low market is that many owners who have enjoyed low interest rates before see the rising mortgage rates are unwilling to sell homes and buy new houses, which directly leads to the shortage of existing house stock in the market and tough real estate sales. Mortgage rates are at their highest level in 20 years, limiting home ownership opportunities for many middle-class families. There's no doubt that the Fed has inadvertently expanded social inequality, with only high-income households earning over $100,000 a month. That's all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.